Enphase stock is down over 80% from all-time highs. Trump has just been elected as the president of the United States, and that means all green energy companies are definitely going to crap. Interest rates are at all-time highs and nobody is installing solar as oil prices continue to fall. And the whole situation is a mess, and that is why you shouldn't invest in Enphase. Well, at least that's the narrative surrounding the company. But as with all things, there's always two sides to a story, and when a company finds itself in this situation with sentiment at all-time low and the future seemingly bleak, that it starts to pique my interest. I like to buy my companies when nobody else wants to touch the company, and I'm aware of the risk of potential confirmation bias going into my research by already assuming that the sell-off is unwarranted, because in some cases, the sell-off could pretty much be warranted. With that said, let's see whether or not Enphase can recover from its current predicament and whether or not it has the potential to return to all-time highs. But as always, potential is a dangerous word, so let's dive in. Now, the narrative has always been that Trump is bad for green energy companies and Enphase, being a solar company, is swept up together with the rest of them. You see, Trump is, supposedly going to take away solar credits, cause margins to compress and things like that, and so that is all bad for the company. And so before I did any research, I had to find out how true this was. Now, when I last checked, Trump actually came into office on the 20th of January 2017, and on that day, Enphase actually closed at $1.85. Now, on the last day of his presidency, which is the 20th of January 2021, Enphase closed at $197.50. You can see that's actually 100x. Now, if you say that, there was the everything bubble and things like that going on back then, if you actually zoom out and then basically just take the time frame between, the start of his presidency before the pandemic started. Now, in March of 2020, Enphase was actually at $60. So that is still a 60x from the time Trump actually took office. So I'm not saying that there's definitely going to be another 10x or even 100x potential here, but I am saying that the narrative around Trump taking office being bad for all these companies might be a little bit overblown. Because while he does take away credits, he also plans to basically lower corporate taxes, which improves profitability. And if Enphase can survive a Trump presidency, and more than survive, actually thrive during a Trump presidency the first time around when they were still a small and unprofitable company, I think they will do just fine this time around. Which brings me to my second point, profitability. You see, back in 2016, Enphase was not growing revenue, it was unprofitable. Now today, its revenue, despite all the headwinds, is still 4 times more than what it was at the start of the previous Trump presidency. Now, in terms of free cash flow, back in 2016, it was negative $21.7 million in free cash flow, and today, over the trailing 12 months, the free cash flow generated by Enphase is around $277 million in free cash flow. And so in my perspective, I don't mind in a sense resetting Enphase and growing without the boost of solar credits, because I do feel that the organic growth driven by demand is more sustainable than whatever kind of growth you get by introducing this kind of solar credits. Now with that, I do want to admit some of my own biases at the start of the video. Previously, I wasn't too interested in looking at all these solar companies, primarily because I felt like they were overvalued. I also don't think that solar power will become our biggest source of energy. I'm more of a nuclear energy type of person. In fact, in my final year of university, my study was on nuclear power, but honestly, I haven't tapped on my engineering background in years, right? So at this point in time, I'm more than a little bit rusty. So I would say I actually fall a little bit more on the skeptical side when it comes to the adoption of solar energy, largely due to its inefficiencies and its space limitations. Solar farms do take up a lot of space and a lot of land space, and in some smaller countries, with population expanding, right, this basically just creates another problem. So over time, I've definitely noticed the improvements in efficiency and lowering costs, and so decided to take a closer look. So what is it exactly that got me interested in Enphase? And so let's start with what Enphase does. So humans have been making use of solar energy for centuries. Now in the past, we used energy from the sun to start fires, to cook and things like that. But it was only in the 1950s, I think 1953 or 1954, that the first solar panel was created and used to power a light bulb. Now, without getting too technical into what happens in a solar power system, basically the solar panels absorb the sunlight, right? It releases electrons, produces some sort of, electrical charge when that happens, and that creates an electrical current known as DC power or direct current. However, the problem is, right, a lot of our home appliances basically run on what is called alternating current or AC, and that means you actually need to convert the DC power absorbed by the solar panels into AC before you can actually use it for your household appliances, and that is exactly what Enphase does. They actually produce this thing called the microinverter, which is used to convert DC power into AC. Now, their latest microinverter is called the IQ8, and we'll talk more about their product in a little bit. Now, there's basically a whole bunch of history behind why we are currently using AC to power our household appliances over DC, despite some of its benefits, because this was actually one of the questions that I thought of when I was doing my research. Now, I will not get into the differences and the benefits and all that in this video, because I just want to stick primarily to what Enphase does. But basically, if you remember the electrical graphs that we learned about in secondary school or perhaps middle school, okay, so the nature of AC power, basically it looks like this graph over here, is that the direction of the current and the voltages switches periodically, and it basically makes it easier for us to work with, and that's why we tend to use AC with our household appliances. We use transformers to easily step up or step down the voltage. So apart from microinverters, what Enphase actually does is that they produce batteries to store the solar power. And because DC power is easier to store, so any extra energy generated can be stored for future use. Now, some people complain about some slight inefficiencies here because you basically absorb the solar energy in DC, convert it at the panel using the microinverters into AC, and then back again to DC in order to store it. So we'll address this as we dig more into, the Enphase line of products. But I just want to give you an idea of what Enphase does. So Enphase's latest battery pack is the IQ Battery 5P, and the 5P basically stands for 5 kilowatt hour, and typically a household needs 2 to 3 battery packs. Now, personally, for me, I don't actually see any value in solar panels. I think with increased competition and with China producing cheap solar panels, these are going to become a commoditized product. And what actually interests me is the microinverter that Enphase produces. Now, this microinverter is basically a new form of technology that is disrupting the old technology of string inverters. Now, the main core difference between the microinverters and string inverters is that the microinverters are actually attached to the back of each solar panel, and the conversion from DC power into AC occurs at the panel. However, for string inverters, what they do is that they actually connect a series of solar panels together into one centralized location, and the conversion of all the DC power absorbed by these solar panels occur at the centralized location. Now, if you remember, electrical circuits that we learned before in secondary school, there are two different types of electrical circuits, right? The series circuit, which is over here, and the parallel circuit, which I'm going to show you over here. Now, in a series, I think the problem is that, should any component not be working, the entire circuit will not be able to light up, right? The whole circuit will fail. However, in a parallel circuit, even if one component fails, the other part of the circuit still works because there's alternative pathways for the electricity to flow. Now, if you take that understanding and apply it to solar inverters, the string inverter is basically like a series circuit. And what happens here is that the string inverters actually caps the total electrical production of each panel based on the lowest producing panel in a string. So if your panel is covered or is dirty and things like that, or is perhaps malfunctioning for whatever reason, even if the other panels in the string is working fine, they will not be able to produce as much electricity. You are only going to be able to produce electricity capped at the lowest panel, which is whatever panel that is malfunctioning at the point in time. Now, on top of that, if your inverter isn't working, your entire solar system will be down, or at least that whole string of solar panels will be down, because there is a centralized point of failure. However, when you use a microinverter, right, the affected panel will definitely experience lower power generation. However, the thing is, all of the remaining panels will be able to generate electricity at its full capacity. Now, although the microinverter, right, is actually more difficult to repair than a string inverter, one of the upside here is that while the repair is happening, the other solar panels can continue generating electricity for your household as per normal. However, this is not true for a string inverter, and if you have to take the string inverter offline to do the repairs, your whole solar system goes offline together with it. Now, on top of all of this, string inverters are actually easier to install and require lower upfront cost. However, the average lifespan of a string inverter is only 10 years compared to a microinverter, which have an average lifespan of 25 years. And in terms of your return on investment, installing a solar panel system using microinverters, I think people tend to see some sort of return on investment in a 6 to 9 year time frame, depending on the solar credits you receive and how much of a loan you actually take out. So as you can see from this graph over here, basically you incur an upfront cost for installing the solar system. However, because you reduce your energy bill by anywhere between $100 to $200, this savings on your electricity bill basically eventually makes up for the price of the installation. And after a period of time, this becomes a positive return on investment after you factor in other soft costs and maintenance and things like that. And so that is the general idea. But tying all of that together is what we call the Enphase Ensemble system. Now this Enphase Ensemble system, let's try to understand it from a household level before talking about the electrical grid. Now, apart from microinverters and the Enphase, IQ batteries, right? You can actually install the Enphase IQ gateway, and this basically transmits data from all the different moving parts within your solar system to you, and you basically can control everything through an app. So what you're able to do is actually you can track the efficiency of each solar panel. You can actually tell whether or not there's something wrong with the panel, and so you can basically rectify the problem immediately. You can also manage the electrical load used by the household appliances through the Enphase app. Now, this was definitely interesting to me as someone that, is living in Singapore and not having much contact with solar. Now, during the time of year, at a certain time of the day where the sunlight is readily available, of course, your whole house can be fully functioning. Every single electrical appliances can be turned on. However, perhaps during certain times when you're trying to conserve power or if you're running on battery, you can actually choose certain appliances to be running at half power or to even be totally turned off. Now, additionally, Enphase are also adding the electrical vehicle bi-directional charging system by 2026, which means that you can actually use solar power to charge your EV, and at the same time, your EV can act as a battery for your house in case of any emergencies. So, that's on a household level, right? But on a larger scale, this Enphase Ensemble system basically is grid agnostic, which means that it doesn't rely on the electrical grid. So what this means is that in general, there are a lot of, hybrid solar systems which are still linked to the electrical grid. And in instances where there are certain power outages, your whole solar system goes down together with the grid, which basically defeats the whole purpose of having, the solar power system. And Enphase, knowing this, they basically have what we call the Enphase IQ system controller, and this controller manages your entire solar power system at home. Now, when everything is working as per normal, your Enphase solar system connects your house to the electrical grid. However, once it senses a kind of power outage or some sort of disruption in the power lines, this Enphase IQ system controller detaches your entire house from the electrical grid altogether and start running your home appliances on Enphase batteries seamlessly. Now, this is also possible because of the new technology that is embedded in their IQ8 microinverters, the newest ones, where the microinverters actually form a mini grid of its own. So this can actually sustain your entire solar system for at least a couple of days, and once the electrical grid is back up and stabilized, the IQ system controller will then reconnect your house back to the electrical grid. So why am I actually talking about this, and what I actually like about this idea from Enphase is that they are no longer just selling a single product like a microinverter or a battery. They are solving the energy problem by selling you their entire ecosystem. Because if I'm only selling a product and a better product comes out, then I'm likely to make the switch if it's cheaper or if it's slightly more efficient. However, if I'm within an ecosystem and the new product, though perhaps slightly better, may not fully integrate into my system, then I am less likely to adopt the new product, and this makes Enphase Ensemble system sticky for consumers. Now, take for instance, as an Apple fanboy, I can tell you I know that there are certain products out there that are better than Apple, but my whole life is now basically run on Apple, right? I have my notes synced, my calendar is synced and things like that. And so even if you tell me, the Google Pixel comes out with a better phone, I'm still rather unlikely to make the switch. And so the barrier of entry here becomes extremely high for competitors because they have to offer something so significantly better than what Enphase has in order to entice potential customers to leave the Enphase ecosystem to adopt their product. Now, one of the main issues facing microinverters has always been that the efficiency of solar absorption by the solar panels is increasing at a faster pace than the output of the microinverters. So if my panel is basically absorbing more energy than what my microinverter can output, then there's basically wasting of energy. Now, with their latest IQ8 technology, Enphase has in a sense sense taken a step to bridge the gap, not fully, but somewhat. Now, depending on which model of the IQ8 you are using, I think it can output anywhere between 320 to 640 watts, and the average solar panel produces around 400 watts of power. But this is something we need to keep an eye on how fast solar panels continue to improve. And I also think the caveat here, if I'm not mistaken, is that the higher output microinverters, right, are targeted at commercial and industrial customers rather than residential. But definitely, this is a step in the right direction nonetheless. Apart from the new microinverters that Enphase are selling, they also have their patented burst mode technology. And I think for those of you who are following Enphase for quite some time, this shouldn't be new to you. This basically allows them to turn on solar panels and start absorbing energy under low light conditions. And what this means is that your whole solar system will start working earlier in the morning and stops working later in the evening. Now, this means that your Enphase solar system will deliver better performances and produce up to 25% higher solar yield compared to other systems. And I think it is telling that, they are the only company out there offering a 25-year warranty, which I guess speaks to the confidence that they have in the quality of their products. Competitors are offering only anywhere between a 10 to 15-year warranty, so this is really quite impressive from Enphase. Additionally, Enphase microinverters also receive a NEMA 6 rating. So after some, kind of research, I basically realized that, it's a certification for how water resistant you are. And so in this case, it basically tells us that Enphase microinverter is submersible depending on specific conditions of pressure and time in water and oil. So basically, what this means is that their micro inverters can actually withstand, they say whatever Mother Nature throws at them. So even in events of hurricanes and things like that, they should perform in a fairly reliable manner. And so this picture you can see over here is taken from Enphase website. And so they are basically certified, right? But at the end of the day, it doesn't really matter if you have the best product in the world, if you can only sell it to 3 people, because even then, your company is definitely going to fail. So therefore, when I look at a company that that is poised for growth, basically one of the things I like to look at is the total addressable market and whether or not the revenue growth of the company is faster than the entire market. Now, based on a few different research pieces, the numbers are slightly different, but this piece by Fortune Business Insights basically, gives the average of some of the other reports I was reading. Now, the global solar market was worth around $250 billion in 2023 and should reach around $436 billion by 2032. Now, that is a 6% CAGR during the forecast period. And when we take a look at residential solar market specifically, which is Enphase's target market, this entire market was worth $44 billion in 2023 and should grow to $66 billion by 2032, representing a 5.4% CAGR. Now, apart from this solar market, solar storage in general is basically worth $46 billion today, and that is expected to grow at a 15% CAGR until 2032 to become a $197 billion market. And in this particular area, Enphase faces competitions from companies like Tesla. And this is where the whole Enphase ensemble system that I was mentioning earlier can actually help them against the competition. Because I know some people actually say that the Tesla Powerwall is much better. However, because if I'm already using the Enphase system at home, then I'm more likely to just get an Enphase battery to replace my existing batteries, or basically just choose an Enphase battery to go with my Enphase system. Now, if you drill this down even further and look at the global microinverter market size, it's actually only worth $3.5 billion. Now, this is expected to grow at a 14% CAGR to $11 billion by 2034. Now, if this area is so small, why is Enphase targeting it? And why am I actually bringing this up? You see, because Enphase is so dominant in this microinverter technology, so based on a rough revenue estimate, they hold somewhere between a 50 to 60% market share. And if they can maintain this dominant position going forward, then, this microinverter or this market is going to become a significant revenue driver for them into the end of the decade. Now, since we have understood what Enphase offers to the customer, we also have understood the number of people that could potentially use their products. The question is, why isn't this reflected in the numbers? Now, from 2016, Enphase actually grew revenue by 7 times. In 2023, they recorded $2.3 billion in revenue. That is up from $320 million in 2016. Now, however, due to the high interest rate environment in the last few years, that has definitely impacted demand. You can see the point of installing solar is so that you can make the loan repayments for your solar system, and these loan repayments will actually be cheaper than your energy bill over time, and then because of the cost savings, it eventually pays for the system. Now, with higher interest rates, the savings are less and it takes way longer time to break even and to even make a profit. So this becomes a less attractive proposition for people. And another hit to their revenue is basically due to weaker demand in Europe. Now, in the recent earnings call, Enphase basically addressed this. They tell us that the 15% decline in revenue from Europe basically is due to the high, electrical power prices eventually coming down again, making it less attractive for people to go for solar. And ultimately, it is the slower economic growth in the region that make the consumers a little bit more wary of, incurring this kind of large upfront cost. So I think as an investor in Enphase, you have to know your company and you have to understand the proper risk management in your portfolio. And I'm saying this because Enphase is a cyclical business, but that doesn't make it a bad business. Now, the semiconductor business are cyclical businesses as well, but look at how all the semiconductor companies are performing now. So personally, for me, I don't like cyclical businesses to be the core holding in my portfolio. I try to keep it at around a 10% position or less. And so this way, I basically minimize the impact of the cyclical nature of the business and how it actually affects my portfolio. So I think what this shows is that in the face of a recession or an economic slowdown, solar energy is still not one of those things that the consumer puts at the top of their list of must-haves. And my expectation is basically that solar will only be a secondary source of power. Now, could things change in future? With how fast the technology is improving and things like that, with certain regulations mandating, solar power to be installed as part of new homes being built. Definitely, that can definitely happen, but I'm not going to use that kind of future projections in my valuations because I value based on what the numbers tell me, and I don't value based on I hope this will happen, I think this will happen. So during these times when sales are low, we need to be able to look at other metrics within the company, apart from sales and profitability, to determine whether or not the fundamental strength of the company has been affected, and I will cover this later on in the valuations component. Enphase did not just have declining revenue, right? They actually also guided for a lower fourth quarter. Now, this is a reflection of, perhaps some concern when it comes to policy and the economic risk going into 2025. And what investors are pricing in is that basically Trump being a boost to the oil industry will eventually drive down the cost of electricity, and in so doing makes solar less attractive. Additionally, there are also concerns about a weaker US economy in 2025, even a possible recession. I think we have seen how a weaker economy can affect demand in Europe, and imagine, if that happens to the US. Now, in 2023, right, Enphase's split of revenue between the US and the international market was actually quite even, a 60-40 split. So if a drag to Europe basically saw revenues take a hit, then a US recession could cause additional downward pressure on revenue. Of course, we have already seen things like high interest rates kill a lot of the demand in the US, so it's uncertain how much further down will a recession drive the demand for solar energy. And so at the end of the day, it's really not all doom and gloom, because if you consider the cost of residential solar, that has been declining over the years. Now, I think if we get through the first half of 2025 without a recession in sight and the soft landing is more or less confirmed, then this company will hopefully pick up in the second half of 2025, especially with easier comps. Or I would think that this company can actually also survive a mild to shallow recession in the US. Now, I also want to point out that solar panels have been increasing in efficiency over the years, with the average residential solar panel being able to convert anywhere between 20 to 25% of the sunlight they capture into energy. This is up from the low single digit 6 to 8% range that we had in the 90s or even early 2000s. Now, I do have to say that this is actually one area that I'm paying close attention to, not because it breaks my thesis in any way, but this is something that I'm actually incorporating into my thesis. You see, I always wondered why the efficiencies of solar panel is still so low. Now, I don't have any qualitative data to back me up over here, but I just feel like if you're converting about 20% of your energy source into usable energy, that is actually not a very efficient process. Whether or not it's even viable or feasible to get this efficiency up even higher, I'm not too sure. Because, when I think about it, natural gas plants, basically, if they use combustion turbine, they reach efficiency of somewhere between 35 to 42%. A natural gas combined cycle power plant basically reaches efficiencies of up to 60%. So if there's anyone out there watching this, you perhaps you deep dive into solar technology and can help me better understand solar research and what kind of efficiencies we can expect going forward in this system, I'll be happy to hear from you. Now, before we dive in and look at the different trends, let's take a look at the most recent quarter for Enphase. Now, in the third quarter of 2024, Enphase reported revenue of $380 million. This missed analyst expectations by about $13 million. Earnings per share, their EPS came in at 33 cents, which again missed by 5 cents. Now, on top of all of that, like I mentioned before, the guidance for fourth quarter also basically missed analyst estimates. I think analysts basically expected them to guide for around 430 million in revenue or something slightly more than that. However, Enphase gave a range of revenue guidance for the fourth quarter between $360 and $400 million. Now, at the time of the earnings call, right, they actually already told us that they have secured contracts worth up to 85% of their midpoint guidance, basically which is $380 million. So if you say that they have 85% of that, which means that currently they have secured around $323 million in revenue, and they have another $57 million to go. So Badri, who is the CEO, basically also addressed some of the concerning issues regarding their lower guidance in the fourth quarter. Now, this is actually due to certain supply chains reaching equilibrium, and at the same time, they also expect to be impacted by a bankruptcy of a large US customer. However, they do tell us that because of the distribution channels that they have built out over the years, the revenue lost from this customer can be made up from the rest of their distribution channels over time. Now, if you zoom out and take a look at Enphase's performance over the years, you'll realize we see a huge boom in the solar industry between 2021 and 2022. And I guess what we're seeing now basically is the solar industry coming back into a more sustainable growth trajectory. Now, very interestingly, if you put the chart of Enphase, basically their revenue and profitability, right, you'll actually see that it matches the price chart almost exactly, and that basically explains to you why the price action of Enphase has been so volatile over the last couple of quarters. So at this point, my 2024 revenue basically is derived by adding up the revenue from the first 3 quarters of this year, taking the 380 million that they guided for in the fourth quarter. That will give me a 2024 revenue of around 1.3 billion. At the same time, cash flow margins are about 30%, and the current capital expenditure is around 3 to 3.5% of their revenue, and I expect that to be more or less the same lah. Now, basically, if you assume that the growth of solar never fully comes back in the next 4 to 5 years, with a WACC of 9%, which basically it's calculated over here, and a terminal growth rate of 3%, which means that after 2028, Enphase only grows at 3% forever. And you also consider that they have $1.7 billion in cash, debt of around $1.2 billion, and they have a total of 135 million shares outstanding, then today's price represents fair value for the stock. But if you thought that that was all there is to the valuation, you are wrong, because we are going to dig even deeper. Now, if you remember earlier, I was saying that, because this industry is cyclical in nature, we have to look at other fundamental metrics to tell us whether or not this company is actually healthy. And so if you think about how Enphase's business work, they work closely with installers to get their products into the hand of consumers. And I do believe that the rate of growth of the number of installers working with Enphase will give us an indication of future revenue. Because these installers, they are on the ground, they can actually see the demand in their local neighborhood. And because there is still demand, more of them are choosing to work with Enphase. And so, if the installers are not seeing demand, like I said, they are less likely to partner Enphase. And as you can see over here, in the last 10 quarters, the number of installers that are working with Enphase has grown by around 8 to 9 times. Now, apart from that, on a quarter-to-quarter basis, the number of microinverters that they have shipped out inflected upwards significantly for the first time. Now, one of the things that actually concerned me was the inventory build-up with Enphase. At the start of 2021, they only had around 34.8 million in inventory. Today, that number stands at $158 million. Now, this is definitely down from the fourth quarter of 2023, where their inventory was at $213 million. And so when a company has too much inventory, right, it means they are not selling through their inventory fast enough. So how do we exactly assess this? And we actually use this ratio called the turnover ratio. What this is actually we take the cost of goods sold divided by the average inventory over the quarter, which means you take the starting and ending inventory, you basically divide it by 2. And so what this gives you is basically a correlation between the amount of money spent to generate revenue and the amount of inventory you manage to offload. So in terms of a turnover ratio, usually the higher this number is, the better. I would prefer if this number is actually above 5, but this is actually quite industry dependent. So if you take a look at the turnover ratio for Enphase, right, you actually notice that back in 2021, this number was quite healthy, right? 4.3, 5.2, 4.1. However, this turnover ratio basically started to decline in 2022, and this coincided with the increase in interest rates. Now, and this basically decline in turnover ratio lasted all the way up to now in 2024. And so this is something I will definitely be looking at and hoping this inflects up and goes back to a healthier level closer to 5. But if you take a look at other companies within the same industry, you also notice that, companies like First Solar has an inventory turnover of around 1.7 times, Solar Edge around 1.8 times. And this inability to turn over inventory is not just an Enphase only problem, but a more industry-wide problem, which basically signals there is some sort of macro factors going around, which as we know by now is the high interest rates. And so on top of this, actually an analyst asked a very interesting question, which is, something to do with Enphase's working philosophy. Now, previously, as Enphase cut costs, they actually pass on these savings to the consumer. However, that trend has stopped recently with inflation, with the macroeconomic conditions making it hard to do so. And so this analyst basically asked whether or not, this is something that we can expect them to revert to moving forward. Now, so this is what Badri had to say regarding that. Basically, what he tells us is that, they actually move manufacturing back to the US, and this actually makes their manufacturing costs increase by around 10 to 15%. But at the same time, they are also delivering more than 10 to 15% in increased value to the customer. So it's basically like your television set, right? The kind of TV that you can get today for about $1,000, $2,000 is vastly better than the TV that you can get for $1,000 to $2,000 10 years ago. And so basically, another way of fighting inflation is not just to decrease the cost, but to increase the value that is delivered to the consumer. Now, he basically goes into further detail by talking about the next two generations of their microinverters, the IQ9 and IQ10. These inverters use the gallium nitride technology, which provides the consumer with more power. At the same time, it allows Enphase to further reduce costs by reducing the number of parts within the microinverters. So if you consider all of these things together, what you actually have is Enphase growing their network of partners, expanding their distribution channels through the number of installers that they have, and their core product, which is the microinverter, basically inflected upwards in terms of sales. Now, their revenues have actually also inflected upwards back to growth, and they are expecting the next generation of microinverters to be ready to ship in the second half of 2025. Now, I know some people are actually quite disappointed that these microinverters are shipping in the second half of 2025, not the first half of 2025. But as a recent investor in this company, this is actually not a big deal to me because I had no expectations beforehand. Of course, this is not something we want to see too often from management, but actually it's not too big a deal. I mean, Elon Musk always makes these big promises and then always misses by a couple of years, right? So I think, moving into the second half of 2025, on top of all of this, you're likely to, experience even more rate cuts by then, and you perhaps have a little bit more clarity on how Trump plans to implement some of his policies like tax cuts and things like that, and how all of this will eventually act as tailwinds for Enphase going into 2026. And so if you apply these assumptions into the DCF, this is what you get. Now, as you have seen, if Enphase actually meets their midpoint guidance of fourth quarter of this year, they would have actually re-inflected back to growth, 26% year-over-year growth to be very exact. And so if moving forward, you expect Enphase to grow between 20 to 25%, with a cash flow margin of around 31 to 34% in the low to mid 30% range, then the implied share price today should be around $98. Now, if you take a look at analyst projections, right, analysts basically expects Enphase to ramp up growth pretty quickly in 2025 because of the easier comps, and so they expect revenue growth of around 32%. And then beyond 2025, basically analysts expects them to grow between 23 to 25%. And so if you model that out and you take a cash flow margin of perhaps 31 to 35%, and so how do I justify the additional 1% in cash flow margins is basically operating leverage as they increase their revenue. I think we have seen previously, both in 2022 and 2023, that they can maintain their margins over 30% over here. So if you consider all of these things, then the implied share price should be around $115.80. Now, all of these are not buy and sell recommendations. This is just how I look at the company, and I'm by no means an expert in solar energy, which is why Enphase position in my portfolio is actually slightly less than 10%. Now, remember the assumption here is that solar energy will not become our primary source of energy. I still do believe that in the long term, nuclear might actually be a better and safer option, but I'm way too rusty to comment comment more at the moment, and I will start brushing up on my understanding in this area, and then perhaps we'll talk about it in future. But I'm going to look into this company, Enphase, even more and to follow how it performs every single quarter and give you an update. Now, bear in mind that the current discounted cash flow only assumes growth up to 2028, and after that, we are applying a terminal growth rate of 3%. And I think that it is likely that Enphase and the solar industry will not just grow at 3% after 2028. Now, additionally, I don't believe this company is optimized for free cash flow yet, so this valuation is going to change along the way, but this is just an estimation of what I expect in the coming years ahead. Now, this video is long enough as it is, but I haven't fully covered everything I want to talk about this company because I do want to cover how the demand of solar across the globe will actually affect Enphase as they continue to expand their business, and the potential impacts of the IRA tax credits and how that affects Enphase basically valuation and their margins. So if you are interested to hear more, definitely let me know down in the comments below. But there's also another company that has been similarly beaten down and has already doubled since the start of the year, and I talk more about them over here, and I'll see you in the next one.